Hi everybody, REITs will need to pay out at least 90% of the income to investor as a dividend. Thus, there is very minimum retained earnings the REITs will keep. However, REITs will need to constantly buy properties to grow. So, where are they going to get the money to continue to buy property with limited or no retained earnings? Thus, the REITs have to go into fundraising activities to raise money. I touched on the various fundraising activities that how a REITs manager will do to raise fund, and also if you are a retiree and have a large REITs portfolio, I'll talk about the risks that you encounter when all these fundraising activities come. Practically, when it comes to fundraising, there are two main categories. One is called debt financing and one is called equity financings. So when it comes to debt financing, it means actually the REITs just go and borrow money. So they borrow money from the banks, and there's two parts of borrowing. One is either a secured loan or the other one is called an unsecured loan. And usually I will prefer to look for REITs that have a high percentage of their loan is unsecured, or sometimes you can even find a REIT that 100% of their loan are unsecured. This indirectly means that the banks or the financial institution have a good confidence on the capital management or on the financial strength of the REITs and also the sponsors. Another way of the REITs to raise funds is to issue bonds, or sometimes called mid-term notes. And a mid-term notes you see about 5 to 7 years. For example, we can see that Starhill Global early this year had do 125 million fundraising by issuing a mid-term notes that will mature in 2028 with an interest of 2.23. And this is just some of the example of the mid-term notes that's currently in the market. And if the investor want to invest in these mid-term notes, the minimum investment amount is 250,000. And from there we can see that most of the coupon rates issued by the REITs is actually less than 4%. When the REITs get all this money, what they do property acquisitions. This is, for example, we look at Mapletree North Asia Commercial Trust, where last year they go and buy a 50% stake in their Seoul office purely through debt financings. So the good part when a REIT buy property through debt financing is you will most likely expect the DPU to go up, as there is no change in the equity base, and thus with no change in equity base and the income going up because of acquisition of properties, thus the DPU will definitely go up. However, the bad part about debt financing is the gearing ratio will increase. And we know that there is a cap of 50% set by MAS. Thus, a REIT was not able to do debt financing forever. This is an example to show that Parkway Life actually bought a nursing home purely to debt financing. Definitely you can see that the DPU and the U is sure accretive, and however you can see that their gearing have actually increased. So the second form of financing actually is called equity financings. When it comes to equity financing, you see you increase the equity base, as why more units will be issued. This will usually result in lowering the gearing for the REITs, and thus you indirectly create more headroom for the REITs in future debt financing activities. What are the various methods of equity financing? One of them is called issuing of perpetual securities. Perpetual security is called quasi-equities, and thus is quite pretty unique is it will not increase the equity base, and you will also not affect the gearing. So it is sort of so-called a loophole for the REITs to raise money without affecting the equity base and without affecting the gearing ratios. And Mapletree Logistics Trust has just recently issued a 400 million perpetual securities with a 3.725 dividend yield. And these are just some of the examples of the REITs that have issued perpetual securities that's currently traded in the market. And same thing, for investors want to buy the perpetual security, the minimum investment amount is 250,000. And from the coupon rate, we look at it, the perpetual securities, the coupon rate will be higher than the mid-term note and the bond. Remember we have mentioned that Starhill Global have issue a midterm note matured in 2028 at 2% interest. But let's look at the perpetual security issued by Star Hill Global, which is actually 3.85, which is higher than the midterm note. Thus, in general, perpetual securities, their coupon rate will be higher as the dividend is supposed to be perpetual. And however, all the REITs were built in with a call date function where they have options to call back the perpetual securities. Okay, if they didn't call back, then there may be a step up, step down, or reset of the interest that's subjected to the term and conditions stated on the term sheet when the perpetual securities is issued. As perpetual securities does not affect the gearing and also does not change the equity base, so it will be a good way for fund manager to raise fund. However, indirectly it increase the risk exposure of the fund, where actually perpetual security is also considered one form of fixed income. So come 1st January 2022, MAS will going to tighten these rules on perpetual securities. MAS has stated that beside the 50% gearing ratios, the interest cover ratios for the REITs should not be less than 2.5 times. However, this interest cover ratio is excluding the interest paid for perpetual securities. So from 1st January 2022, there will be something called adjusted interest cover ratios. And this adjusted interest cover ratio will take into consideration of the interest for the perpetual securities. And it will not allow to fall below 2.5 times. And what happens if the REITs, the adjusted interest cover ratio fall below 2.5 times? Then the REIT gearing will have to be lower from 50% to 45%. This is one way to safeguard investors and also to prevent the REITs from taking excessive leveraging when they want to acquire properties. This is an example to show the difference between the interest cover ratios and the adjusted interest cover ratio from one of the REITs. We can see that it is 5.2 times when they didn't consider the interest paid for perpetual securities. And when they take into the interest paid for perpetual security, which is called the adjusted interest cover ratio, you can see that the interest cover ratio have dropped to 4.3. So this is one thing everyone need to take note of, and will kick in 1st of January 2022. The next form of equity fundraising is called placement shares. Placement share is not for retail investor. It is only for institutional investor. It is a very fast way of equity fundraising that the REIT can do. When they want to see a property, they just need to do a placement share. The fund can come in very fast, as it no need to go to EGM to get unit holder approval. So it will be a quick way to do it. And however, because of the increasing in equity base, retail investor may feel that there is certain form of dilutions to their holding. Thus, the REIT manager will not issue more than 10% of the units when they do a private placement shares. This is an example that Capital DC have recently issued 81 million of new units through private placement, and with that placement they are able to go and acquire data centers in a fast way. Usually for REITs, when they want to do fundraising to acquire property, they will use a combination of various methods. Let's look at CapitaLand China Trust, where they acquired 4 logistics property in China. They start off with doing a private placement to raise 120 million by issuing additional 100 over millions of units. At the same time, they also do by debt financing to cover the 60% shortfall, and this indirectly will result in raising the gearing of the acquisitions. The third form of equity fundraising will be called preferential offers. Okay, preferential offers will offer only to existing unit holders. That means you must be a unit holders for their REITs. Then you are being offered to buy additional units at a discount price. However, if you decided not to buy it, you are not able to sell it off. So it is called non-renounceable. Some people put it quite bluntly, it's something like a take it or a leave it offer. You want, you take it and pay money. You don't want, forget about it. So this is what I call a preferential offer. So let's look at Fraser Centrepoint, where last year they start to acquire the remaining interest of 5 retail mall and the 1 office property in Tiong Bahru. And what they do is they do by doing a private placement followed by a preferential offer to the existing unit holder. And we can see from here is, usually when it comes to private placement, the price discount will usually be lower compared to preferential offer. The issue price for the private placement is $2.35, but the issue price for preferential offer is $2.34. So indirectly, unit holder will usually be able to enjoy at a lower issue price compared to institutional investor. And this is another example to show Maple Tree Logistics Trust have do a private placement and also a preferential offer concurrently for them to acquire property. And you can look at the issue price for the private placement is 2.027, but the issue price for preferential offer is $1.99. The last form of equity fundraising, which is called the right issues, you will also only given to existing unit holders. Thus, if you don't have the risk, you will don't be offered that. But however, for existing unit holder, if you do not want to subscribe for it, you can actually choose to sell it, your rights in the open market, where even non-unit holder can buy from it and subscribe to the right issues. When it comes to right issues, right, you see the price discount will be much bigger compared to a preferential offer, compared to a private placement, and the amount they're asking for will usually also will be bigger. This is an example like REITs Global. They want to acquire 60% stake in a Spanish office portfolio in last year August. They offer you 454 units out of every 1,000 units you hold. But however, you look at the price drop, discount is 32.9%. So what does that mean? Means that REITs Global, the share price was expected to drop double digit, and if you were not to subscribe for it, you may suffer some capital loss. Let's look at another example like Liverpool. Last year September, they also issue a right issues, and from there you can see the price discount is 47.8%. However, there are also instances when a REIT do equity fundraising is not to buy properties, but this may be a very rare scenario where we can see that first REITs actually they propose a right issues of 158.2 million, is asking investor to give them money so that they can avoid a debt default. We hope that this will be a one-off incident. Besides debt financing and equity financing, there is another method of when the REITs can raise money or can enhance unit holder value is by doing property recycling. What do you mean by property recycling? That means they sell off their existing property and usually at a profit so that they can take the proceeds to go and buy another property. This is just one example where Capital DC recently have divested of their I6 data center located in Brisbane, so they can take the proceeds to help them to acquire another data center in another place. When it comes to equity fundraising, right, there are usually mainly three categories of effect to investor. So the first effect actually is what I call the worst effect that investor will not want to see. It is called DPU Dilutive and yield dilutive fundraising. This will usually happen to a REIT when their price to book is below 1 and they are doing a massive right issue. Let's look at this example. Before acquisition is 70 million. After acquisition it becomes 100 million. The distributor income have increased. However, if you are a unit holder of this REIT, you are being paid 4.6% the DPU before acquisition. After that, your DPU have dropped to 3.5 cents. Means that after you subscribe for the rights issues already, your DPU actually dropped. And what will happen to your dividend yield? Your dividend yield will also drop. And definitely your NAV will also drop. So this is, sometimes I call it, is a value destruction to unit holders. This is one of the worst form of equity fundraising. It can happen to investor. Okay. The second outcome of equity fundraising is a DPU dilutive but yield accretive. What does that mean? It means that your DPU, your dividend per unit will drop, but however, your yield will increase. Let's look at this example. The income will have go up from 40 to 50. Your DPU have actually dropped from 2.5 cents to 2.35 cents. However, your DPU yield have increased. Why it have increased? Because price drop. Yield is always calculated based on dividends against price. So the price dropped, so the yield have increased, and your NAV have dropped. So when investors come to this type of situation, they have to come out money to subscribe for the rights issues. Okay, if not, they will face dilution in the DPU and even the yield. And the third form of impact when it comes to equity fundraising will be, I would say that it's the most ideal form, the most retail investor want to look out for. It is called DPU accretive and yield accretive. This is an example. After the acquisition, you can see that the DPU have went up and the gearing have come down and the NAV have went up. So this will be one of the most ideal situation that most investors will hope that it will happen when the REITs do equity financings. And even if you are retirees, when it comes to this type of equity fundraising, right, if you don't subscribe for it, you will still not really lose out as your dividend will still increase. It's just that when you subscribe for it, you will get even more dividends. This is what the retirees need to take notes when it comes to risk investment, as equity fundraising is a norm for REITs to grow. And if you are hoping for getting dividend income from the risk manager, but they will ask you back for money when you do equity fundraising. So you need to weigh how much you collected, how much you need to give back to the risk manager. This is a pro forma illustration. So when they come for any equity fundraising, you see the risk manager will show you this pro forma. This is just an illustration to show that on the DPU side, you can see that actually the DPU have went up. So the DPU, the percentage have went up by 1.7%, and the NAV have went up, and the gearing had come down. So this is what I call the most ideal situation you want to hope will happen when there is an equity fundraising. Let's look at another one. For this equity fundraising, we can see that actually the DPU have went up. So it's the DPU accretive acquisition. However, you can see that the actually NAV has actually dropped and the gearing have increased. So this is a DPU accretive, yield accretive acquisition, but however is it on the expense of dropping your NAV, increase your gearing. So this is not a very ideal situation of fundraising, but it's still better than DPU dilutive acquisitions. Thus, when a risk manager want to do an acquisition, they will need to weigh, should they do debt financing or should they do equity financing, and which method should they use and what is the perfect combinations. The key component they will need to look at is the cost of the fundraising. When they do by right issues or placement of ordinary shares, the cost is usually measured by dividend yields. But when they do issue by preferential shares, or we call perpetual securities, the cost is definitely higher than the cost of bond. But however, it is lower than shares. So this is some of the balancing act the risk manager will need to do. And also that after acquisition of the property already, we also need to see that does the risk manager able to further enhance the property they acquired by increasing the rental income, indirectly will benefit investor for getting more dividend and also price appreciation. That's all I have to share with you today. And if you feel that this video has benefited you, do remember to like and share this video, and also do leave your comment below to let me know what you think. Do remember to subscribe and press the notification button so that you'll be notified on my next video. I shall see you in my next video. Bye bye.